Hello traders, Rich here, and here's a quick but detailed update on NZDCAD. As usual, if you guys like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see and as per my last video and picture analysis, we know that NZDCAD has been overall bearish, making lower highs and lower lows, trading inside this falling channel in orange. And previously, we were looking for buy setups around this demand zone and the lower trend line, and sell setups around the upper bound of this channel, which is also a trend following setup, lining up with the resistance and supply zone. Anyway, for now, let's make the update. We're approaching this lower bound again, which is a demand and support zone. That's why we'll be looking for buy setups. If you zoom into H4 time frame, we have been lately trading inside this shorter term channel, and now we're approaching the lower support zone from daily time frame, and also this lower trend line acting as an oversold zone. That's why we'll be looking, as mentioned, for buy setups. And as we approach this upper area, we'll be looking for trend following sell setups. If you zoom into H1 time frame, we can see that we have been bearish, making low lows and lower highs. So previously the bears took over here, bears took over here, bulls took over, and so on. For now, we are waiting for the bulls to take over by breaking above the previous major high, which would be, as you can see, around this area. As per my plan, I'll be waiting for a break above the zone. In this case, when the buy is activated, the stop loss would be below the previous swing low, which would be around this area, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective. Of course, meanwhile, until the buy is activated, NZDCAD can still trade lower, form a new high. In this case, we'll be updating our trigger zone like this, for example, or even keep on trading lower and break the support zone downward. Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue. As we clearly see, and as per my last video and picture analysis, we know that GBPCHF has been stuck inside a range in the shape of a descending triangle. That's why we have been trading this range until eventually, of course, it's broken upward or downward. Previously, I was looking for buy stops around the lower bound and price traded higher, and then around the upper bound, we were looking for sell setups. Feel free to check my previous analysis. Anyway, for now, we rejected the upper bound and we are currently approaching the lower bound, which is also a demand zone. That's why we'll be looking for buy setups, of course, unless it's broken downward. In this case, we'll be looking for sell setups on the retest, and if it's broken upward, we'll be looking for buy setups on the retest. For now, we rejected the upper band and we are currently stuck inside this range from H4 time frame, approaching the previous major low. That's why we'll be looking for short-term buy setups targeting this upper bound and this supply zone upper trend line unless it's broken downward. In this case, we'll be expecting further bearish movement till this lower bound of the symmetric descending triangle, where we'll be looking for buy setups. If you zoom into H1 or even a 30 time frame, we can see that we are currently in a range in the shape of an inverse head and shoulders pattern. But for the bulls to take over, we need to see a break above this upper bound. This would be my trigger. For those who know me, I always highlight it like this and I make it in red, just like this one. And when the buy is activated, the stop loss would be below the previous low, which would be in this case the right shoulder, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective. Of course, meanwhile, until the buy is activated, GBPCHF can still be in a range or even break this H4 low downward. In this case, we'll be expecting further bearish movement downward. That's it for GBPCHF. Best of luck, and I'll see you hopefully on the next one.